Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. The investing pendulum seems to have swung in both directions over the last week. In our previous show, we highlighted the money flowing into bond-related ETFs, which we might think of as safe havens or risk-off investments. However, many of the best-performing ETFs this week are tech-oriented and could therefore be considered risk-on investments. Flows and performance don't always go hand in hand, of course. Money managers and other institutional investors are often looking well beyond weekly time horizons when they allocate capital to a fund. Perhaps what we are seeing at the moment is longer-term managed money moving into fixed income ETFs ahead of a possible economic downturn, whilst shorter-term speculative money is embracing risk once more. The flows into fixed income ETFs show no signs of slowing down, with $3.28 billion being pumped into GOVT, the iShares U.S. Treasury Bond ETF. A further $2 billion found a home in TLH, the iShares 10 to 20-year Treasury Bond ETF, and another $3.1 billion was split between TLT, the iShares 20-year plus Treasury Bond ETF, and VCIT, the Vanguard Intermediate Term Corporate Bond ETF. QQQ, the NASDAQ 100 index tracker, saw inflows of $1.18 billion, putting it well ahead of other large caps ETFs in this regard. QQQ's price rallied by 4.21% over the last week, taking its monthly gains to 8.6%. Broad-based index trackers such as QQQ are rarely the biggest movers, as they are more like oil tankers that are easily outmaneuvered by more nimble sector or strategy-specific funds. For example, the VanEck Digital Transformation ETF, DAPP, rallied by 25.6% last week, posting gains in 4 out of the 5 previous sessions. DAPP has exposure to a range of blockchain and cryptocurrency-related equities such as Coinbase, Block Inc., and Silvergate Capital. These stocks and strategies were very much in demand over the last week. For example, this table shows us the 5-day performance of ETFs, which are a top 20 holder of Silvergate Capital. According to data from ETF.com, 66 funds have a holding in the crypto finance house. In this instance, the rule of thumb seems to be the bigger the holding in Silvergate Capital, the better the fund performed last week. The SEC approved the launch of single-stock leveraged ETFs last week, though at the same time it issued a warning about the risks inherent in the products to would-be investors. Single-name, leveraged, and inverse single-name ETFs have become very popular in Europe and the UK in recent years, but the SEC has previously shied away from giving them the green light. As the name suggests, these funds focus on and track the performance of a particular stock, but they often do so with a nuance. For example, gearing the returns by 2 or even 3 times, or by moving inversely to the underlying stock price, such that if the price of XYZ stock rises by 2%, then the value of the inverse ETF that tracks it will fall by an equivalent amount. Such leveraged and inverse funds are designed for short-term trading and can be highly volatile. They are not suitable for buy and hold strategies, as they may contain daily resets that make them more akin to short-dated options than traditional stocks.